Hello friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on CVP analysis. This is lecture number 3 and you can watch the other lectures on CVP analysis in the playlist section of the channel. The following information relates to SB Manufacturing Company. So we have cost element, variable cost which is given as a percentage of sales and the fixed cost. So direct material is 32.8%, direct labor 28.4%, factory overhead is 12.60%, and the total fixed cost of factory overhead is 1,89,900. Distribution overhead, variable portion is 4.10 as a percentage of sales, and the fixed distribution overhead is 58,400. General administration overhead is 1.1%, which is the variable portion, and the fixed cost of general administration overhead is 66,700. Total budgeted sales are rupees 18,50,000. You are required to determine the break-even sales volume, the profit at the budgeted sales volume, and the profit if actual sales drop by 10% and increase by 5% from budgeted sales. So let me first analyze the question. So here it is given that the total sales is for rupees 18,50,000 and the total variable cost as a percentage of sales is 79%. So if you add up 32.80, 28.4, 12.6, 4.1 and 1.1, you will get 79%. It means that if sales is 100, if sales is 100 rupees, then your variable cost is 79 and your contribution will be 21 and total fixed cost is 3,15,000. So fixed cost has three elements: factory overhead, distribution overhead, and general administration overhead. So total fixed cost is 3,15,000. Now let us proceed with the solution. So first let me prepare the income statement. Sales, this is the budgeted sales, is 18,50,000 and the variable cost is 79% of the total sales, that will be 14,61,500. So 79% of 18,50,000 is 14,61,500. So your contribution is 3,88,500. So this is the balancing figure, or when the variable cost is subtracted from sales, you have a contribution of 3,88,500. And from here, I'm going to reduce the amount of fixed cost. So I have calculated the total fixed cost as 3,15,000. So your budgeted profit is 73,500. And this is answer to question number 2. So where you are supposed to calculate the profit at the budgeted sales. So sales 18,50,000, variable cost will be 79% of 18,50,000, that is 14,61,500. Your contribution is 3,88,500, fixed cost 3,15,000, which is given, and the profit is 73,500. Now the first question is to calculate the break-even sales. So I am writing here break-even sales. So how to calculate the break-even sales? I have discussed in lecture 1 that break-even sales is equal to fixed cost by PV ratio. So fixed cost is given as 3,15,000 and PV ratio is 21%. So how I calculated the value of PV ratio. So PV ratio is equal to 1 minus a variable cost ratio. So variable cost ratio is 79%. So 1 minus 79% is equal to 21%. So you have a break-even sales of rupees 15 lakh. So this is answer to question number 1. Now you have to calculate the amount of profit if there is a increase of 5% from the budgeted sale, or there is a decrease by 10% from the budgeted sale. So we have two scenarios. So there is a 10% decrease in budgeted sale, and in scenario 2 we have a 5% increase in sales. So there is a 10% decrease in sales from the budgeted sale, or there is a 5% increase in sales that is from budgeted sales. So your budgeted sales or the revised budgeted sales will be, so your present sales is 18,50,000. So if there is a 10% decrease, it means 90% of the sales will be 16,65,000. And here your budgeted sales or the revised budgeted sales will be 105%, which is equal to 19,42,500. That is 18,50,000. Multiply this with 105%, and you will get 19,42,500. Now you can direct calculate the amount of a contribution, and your contribution will be 21%. I can calculate the contribution as 21% of this sales. That is 21% of 16,65,000. This is the PV ratio, and the amount will be 3,49,650, and this will be 21% of 19,42,500 is 4,07,925. Now from contribution, you are supposed to reduce the amount of fixed cost. So fixed cost remains the same, which is 3,15,000 in both the scenario, and the amount of profit, which is the balancing figure, will be 34,650 and 92,925. So this is answer to question part 3. Hope all the students have recorded the question with solution in your notebook. If you find any difficulty in understanding, feel free to communicate with me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.